So hello, good evening friends. Today I am with my friend Sudhanshu. So today we are planning to start with our first podcast, and before that we are uh, uh, eager to share some information related to NSE's uh, monthly journal, which they post and share. What are the changes? What are the updates in it? So Sudhanshu will continue with the data, and we will discuss about it. So do that.
Yes. So basically, uh, and Nifty NSE, like the index or exchange, which generally hits the different data on the Nifty and other indices in the market. So basically, the NSE release every like one document in every month regarding the what has happened in this month according to the how much return the index has generated in the past some years or some months. They generally give you updates and comparison. They give you also update on the weightage of the different companies and how much the weightage has changed in the recent month, and how the different sector is participating into the indices, so that you can you can build your confidence while investing into the nifties. When like generally you invest into the nifty or index funds, so you should be very aware about the in which sector you are investing, you
Yes.
are trusting the most. Because according to the data, if we go through in our nifty, we can see directly that financial service sector is having a 37% of the like weightage.
Yes.
So you have to trust India's banking sector, NBFCs, insurance sector. Those
Sudhanshu,
yes.
please can you name the big financial institutions that are the part of Nifty 50, as there is highest weightage, 37% of weightage just only covered by financial services in Nifty.
Yeah, generally if you talk about the different companies like in our Nifty 50, HDFC Bank, you can see it has surpassed the Reliance as well.
Yes,
That it is having around 11% of the weightage, 11.18% of the weightage in Nifty.
So Sudhanshu, there is a misconception in our
Yes.
with our viewers that what is the difference between market cap and free floating market cap. As you know that Reliance is far big than HDFC, than how it is leading company in Nifty as with comparison of Reliance. So what is the major difference?
So basically the misconception is happening regarding the market cap and free float market cap. So first, in a very easy language, first you need to understand the market cap. It is actually how many number of share a company is having multiplies with the share price.
Yes.
So if you see in Reliance case, the Reliance company is having the high number of shares with compared to the HDFC Bank.
Yes.
And HDFC Bank price is almost the like equal. HDFC has also around the 7 to 800. Recently it has gone down.
Yes.
So if you compare the Reliance and the HDFC share price, HDFC has the less share price.
Yes.
But if you multiply the share price with the market share price with the number of shares, then you will get the market cap.
Yes.
But the problem is every company is not having the 100% market share and 100% shares into the market. So generally when we calculate the free float, what is the free float market cap? It is like free float number of share. We have to understand that how many number of share that are actually available to the market. How many number of share it is available to trade into the market. Because generally some companies having their like promoter holding as well.
Yes.
So promoter share is not available in the market. So if a small company is having the high free float market cap, it can surpass a big company when the big company is having the less number of share into the free float market cap. So that is the like the reason HDFC has surpassed the Reliance Industries.
Only the promoter shareholders are not available in the market. Rest retailers, FISDs, mutual funds, that rest all are available for trading.
Yeah, generally you see the FII. Sometimes the FII, DIR also like you get the shares through the private placement.
Okay.
But generally it happened before the IPO.
Okay.
They got the shares through the private investing, through private equity maybe. But generally when after listing you purchase the share from market, it would be counted as a free float market cap.
For example, promoter holding is 50% and rest that remaining 50% are available for trading if the company is listed.
Yeah.
Okay. So now we will move on the further data. As Sudhanshu just give the information related, 37% of Nifty is only covered by financial uh, institutions and rest
Yeah.
by the other. So we will talk about the rest now. That what percentage is shared by which sector?
So if we have the data here, like in financial sector, what are the sector financial sector is covering? That is also important to understand.
Yes.
It covers generally the banking sector.
Banking sector.
Banking sector, all the small banks are not there in Nifty.
Yes.
So generally we have the SBI, HDFC, ICICI,
Yes.
and maybe one or two other
Yes,
banks.
Axis as well.
Yeah. But other than the banks, we have the insurance companies like LIC, Bajaj Finance, and other companies
Yes.
that are there. Other than that, NBFCs are also coming under these categories. So that makes a combination of 37%.
Percentage.
Because one sector is not one sector, and one type of company cannot have this much concentration in the market. That is a big concern.
Like as we have
Yes.
Samsung and HY
Yeah,
Hynix
definitely.
in South Korea, and in recent days we are seeing that near about 30 to 40% their index is fallen in recent last in last 2 weeks.
Yes, definitely.
So it is a major concern as two company nearly hold about 60 to 70% of their whole market cap.
That is very concerning for any market. If one investor is investing into the indexes,
Yes.
index we are having the understanding that index is safe.
Yes.
Whenever the market will fall, but index will not fall shortly, and that much they will not go
It
down.
means diversification
Yeah.
is very much important.
Index gives you diversification.
Yes.
But the problem into the South Korean market, that their market is getting concentrated towards only two companies. One is semiconductor companies,
Yes.
that is KSOP.
Yes.
I don't know proper name of the
HK
company.
Hynix.
Yes, HK Hynix, and another is Samsung. So if any market is having 40% and more than 40% of the concentration of two companies only,
Yes.
if there is some negative news or some anything happening to these companies, the whole market will fall.
As I am agreeing with HK Hynix as it is only semiconductor manufacturing company, but
Yes.
in the case of Samsung, it is not the same as they have manufacturing, they
Yes.
have their logistics as well, they have their infrastructure as well, they also manufacture cell phones, mobiles, laptops. So how it is affecting the whole company as HK Hynix is also falling by 10% and Samsung also falling by 12% as Samsung is itself diversified in it and they have multiple business, and then why that one domain is hitting the company.
That's your point is perfect, but if you can compare the Samsung with India as Reliance Industries, you can directly see that Reliance is also having the different diversification in the business.
Yes.
There is having oil, there is having energy, they are also having the retail sector and other footwear brands. They are into the telecom, they are into the finance. So all those businesses Reliance is having. But at the time of war, what happened? One negative news came and Reliance stock fall. Other businesses performing well,
Well.
but the market is only behaving and reacting over the news.
Okay.
So investor is not much concerned about what is the diversification of the company,
Okay.
but market is generally more sensitive towards the negative news.
Then it
That
is
is the-
the negative point of investors as well as they see only one domain and they
Yes.
start investing it.
Yes.
So there is no need of fundamental in that. So this is a negative point for investors.
Yeah, generally in market you see that when negative news comes or the big black swan event
Yes.
comes, then your technical and fundamental
They doesn't
analysis
work.
that
Yes.
doesn't work
Yes.
actually. So the problem is with share market is one negative news is very sensitive. Like it is right or wrong, that investor will decide later,
Okay.
but market will react first.
First.
That is the problem.
Okay. So now we discussed about the bifurcation of financial service that they cover banks, NBFCs and insurance sectors. Now let us talk about in short the remaining sectors, that oil and gas, manufacturing as well, health and care. So please give brief about it and what percentage they in short, and one or two companies covered most out of it. For example, in healthcare, Max Healthcare covers most
Yeah.
of it. So like that, you just bifurcate for our viewers.
Yeah, so basically after the financial sector, the generally next sector is coming, that is the oil and gas and consumables.
Okay.
So in oil and gas, if we get more deep into this, we can see Reliance Industries is coming under this segment,
Okay.
oil and gas.
Oil and gas.
And oil and gas, in only that, Reliance is having the 8% of the like weightage.
Weightage
So
in
yeah,
overall Nifty or in
like in Nifty.
in oil and gas.
No, in
In
Nifty,
Nifty.
Reliance is having 8%.
Okay.
So in oil and gas, Reliance is having the shares. So it is huge in that.
Yes.
Other companies like ONGC is also there.
We can say that 20 to 30% of oil
Yeah.
and gas is managed by
Yeah,
Reliance.
Reliance.
Yes.
They are having the good markets there. If we move further towards the information technology, it is having 7.41%.
Okay.
Like the company TCS, Wipro, Infosys, another HCL Tech. So these companies are having the 7.41% of
So
market.
I think this is the good topic to discuss further on IT sector.
Yeah.
As of my knowledge, in recent years, when I was seeing Nifty 50 and their bifurcation, their percentage of that which sector is covering, how much
Yes.
percentage. In back to 3 years, in COVID era, 15 to 20% of Nifty is covered by IT
IT
sectors.
sector.
And now it is covering only the 1/3, and that means from the
Seven.
top 22,
Yes.
then 7%. What is the major reason you see behind this? Why the fall of IT sector?
Yeah, like-
As IT sector is backbone of India.
Yeah, we generally when we are seeing the export of Indian like goods and
Yes.
services, the services is playing most part of the IT sector. So this was the mainly export driven businesses. But if we see till 2023-24,
Yes.
IT sector was performing well in
Yes.
India.
Yes.
TCS was heading towards 5,000.
Yes.
It was around 4,100 around TCS was there.
Yes.
So when the AI era came, the introduction of ChatGPT, OpenAI, and different AI companies, this was the initially the rumors or the news, whatever was there, that was like related to the IT sector, that the AI will take the jobs of IT people and AI will do work that the generally our Indian companies are providing to other countries. So that was the major concern of the investor. So they started pulling off their money. But the problem was initially it was not that much like fast was there. But in recent 1 year, if we see after coming of the Anthropic and their different models that are actually doing well into the codings, they are managing different tasks, their boards are performing well. So that was the concern. And the Indian companies are lagging, that they have not invested much into AI. They have ignored it. According to my understanding, there is no significant investment of TCS, Wipro, and other companies.
Yes.
I was going through some like news and article where one promoter of the company of Indian big IT giants, they got the opportunity to invest into Anthropic when
Yes.
their valuation was around 100 billion. Now it is heading towards 1 trillion.
Yes.
If they would have invested at that time,
Their
Indian
money should get a
yeah.
tax.
Indian companies will. This is not about market share.
Mm.
You have some like stakes into that.
Yes.
You can like take decisions. You will be part of the decision making in that company as well. If you will have 10% of the stake, you can make a decision on that. So that would have been a good decision, but unfortunately, they could not understand the importance of the AI. But it is there, and it will be there. You can't ignore it. So now these companies are started integrating AI and doing so-called their work in that. But I think it is late for
As,
them.
as we are seeing now that AI is taking with doing that with huge cost.
Yeah.
As we recently seen that Uber allocated the budget. I don't know the exact amount, that what amount of the budget allocated for AI and their use, but the budget they allocated for 1 year they just spent out in the 4 months, and now they are thinking to that they should shift from AI to manual, with means to humans only, and they are cost effective and they are doing much more work as compared to AI with the same cost. So do you think that AI will stop taking jobs of humans from here, or it will be continued, that layoffs will be continued? What
No, this is the one part of the coin. If you
Yeah.
see, generally in the initial time, whenever you start anything, it takes huge investment.
Yes.
You have to give time to get return out of it. For any business,
Yes.
initial cost is high. So if we talk about the AI, it is also having a huge cost of data center. They need to invest much into the chips manufacturing and so many things.
No, I'm just talking about the subscriptions as they for example, Google purchase some models
Yeah,
from
definitely.
Anthropic or ChatGPT, as they do not have to build the whole AI or data science.
Yes.
They are managing by their companies, but of course the subscriptions
I'm
are
telling
being
that
much higher.
the promoter company, the company is providing the AI services.
Yes.
So they are having the high cost on to the like operating these things. So the problem is initial days it will be there, but unlike in case of Uber, you cannot like more get to rely on the AI.
Yeah.
You have to like you need human intervention.
Yes, you have to balance it.
Yes, you have to balance it, because if you like give everything to AI, that AI will like work. This will not give you the this will not add the value to your product or service, anything.
Okay.
They will just do your work. So AI is I think more efficient towards the back end work, but as the like front end work is concerned, AI is not going to take any front end work according to my understanding.
Okay.
The back end work that will be done by the AI, but as far as the cost is concerned, after the time, after some time, um,
The
like
cost
my
will
expectation
reduce-
that cost will
will reduce
reduce
significantly.
with the like huge like maybe AI will also get achieve its economies of scale,
Yes.
how they will like produce into the huge quantity.
But as we know that GPUs, that they consume much more waters, and they need fresh drinking water for their filtration and to cool themselves, as GPU heat very much and they consume lot of waters.
Yeah,
So
because-
many social activities are also against AI and their use, as they should not set up their data centers as GPUs, and we are seeing uh, in India itself, many more cities such as Bangalore, Mumbai, they have water shortage. In recent days, as rainfall
It
delayed,
has reduced.
yes,
Monsoon has late
yes,
in India.
late in India.
So, if you understand any development or new discoveries whenever happen into the like human like era,
Yes.
from the past history as well, whenever the some new discovery, new era is started,
Yes.
there is some development, there is some new thing that has like invented and discovered by the human. But there was some concern regarding this in initial days.
Okay.
If we talk about the AI, this is also having some concern. There is having some problem. Some social activists, some environmental activists, they will also like do their work, because they are also responsible for like protecting our society, protecting our environment from this. And if they are concerned, that is good, because if we started exploiting the environmental and natural resources
Yes.
just without
Means
problem,
there should be some restrictions and there should
Yeah.
be some regulations.
there should be some check and balance.
Yes.
Because if someone will tell you what to do and what to not do,
Yes.
then you if there is no one to like tell you, there is no one to stop you,
Yes, no
then
one to
you
ask
can
the
do
question.
anything.
Yes, yes.
So this is good, but the problem is AI and all the things whatever is going on, this will continue, and according to the time, like time will pass, scientists and the inventors, they will also find some other alternative as well.
Okay.
That one like research is going on into the setup like doing a setup of a data center into the deep inside the sea.
Yes, in
So,
Antarctic
yeah.
oceans and in Antarctica as well
Yeah,
as.
so that
they
can
are
be an
co-places.
alternative if
Yes.
it would be succeed. Then you are only using the seawater.
Okay.
But the problem is if there is an leakage of the chemical, or
Yes.
there is some issue into
Then
the
it will
seawater,
harm the sea.
that can harm the like sea environment and
Yeah.
all the species they are living into the sea. So that is also concern. But every like research should be done properly,
Yes.
and we can only go practical while we have very like surety that it is not going to affect any other environmental like species. So that is the point. And like futuristic, if we talk about the futuristic of the future of the data center, the Elon Musk and the other people are like they're also discussing that setting data center into space, moon and Mars. That is very futuristic, but it can be possible.
We can see in
Yeah.
that near 20 to 25 years from now.
Yeah, it can be done. Like if you are able to connect yourself with the satellite from the moon, you can get the data from there. So it is possible to like do anything, but it will take time. How much cost efficient it would be, that we don't know.
Okay.
So we'll get to know after when it is like it will be there.
So we are just aligned with our topics. This discussion should be also needed to know about the IT sector and their future with the new AI advancements. So now we will move to further sectors, further remaining sectors. In Nifty 50, we had seen financial sectors, oil and gas, and now let's move toward and information technology. And let's see
the next sector we have into the our industry and the in Nifty 50, that is the automobile sector.
Okay.
We can directly see that we have the like multiple companies and they are providing much more services and they are competing with the other foreign companies.
Okay.
So they are also having the good market share into the Nifty and BTs. So if we talk about our automotive, what are the sector we have? We have the companies like Tata Motors, that is currently Tata Motor commercial and passenger vehicles. Now we have the Hyundai Motors, we have Maruti Suzuki, we have Bajaj, we have Ether Energy, we have Ola Electrics.
I think Ola Electric and Ethergy are not part of Nifty 50.
Yeah, they are not part of Nifty 50, yeah, right. But they will come under the automotive.
Yes,
That was my motive to tell.
Okay.
But in automobile, the generally major companies is like Tata Motors, both the companies of Tata Motors, one Hyundai, Maruti Suzuki and Bajaj.
Then we have Larsen and Turbo, ISM Motors are also part of Nifty 50.
Yeah. So they are making the combination of 6.74%. So it is giving a good diversification.
Yes.
Like recent days when the EU and India free trade agreement happened, that was a very negative news for the automobile sector.
Indian automobile sector.
Yeah. So because whenever we import some car that is foreign manufactured and assembled in foreign countries and we are importing in India, if it costs more than 30 lakhs, then you have to give 110% of tariff on that. In India, we generally say it import duty. So that is very huge. If any car is selling and it is costing around 1 crore, 1.2 crore in other countries, in India, if you are importing it, it would be cost around 2.5 crore.
Yes.
And other different charges also, like there it is road tax, insurance, registration, and multiple. If your car is costly, then you have to give all the different like taxes on that.
Yes.
In India, if we talk about the Fortuner, the car we generally like get as a consumer, it is around 45 lakhs, 50 lakhs it is going. But generally, the taxes we are paying for it, it is more than 28% on that.
28 lakhs.
Yeah, like I'm talking about the percentage, we have to pay the GST, and these cars are coming under the premium goods.
Yes.
So you have to pay 28% of GST on these cars. So that is a major part of the cost, and that you have to bear. So these were the concerns regarding the India-EU trade deal. So that was the negative news for the automobile, but sometimes the Tata Motors, and they're having the good news. Hyundai is leading with it is high selling cars in Creta segment. Creta is there, but after the launching of like cars like Tata Sierra, it has also sold around 6,000 to 7,000 in 1 month.
Yes.
So that is the use for Tata, because they were around 4th to 5th position on the top selling car, but now there are two cars is there on top 10 selling car in India. So that is good news, and I think the automobile sector is having the like good future in India, because all the companies are investing into EVs, and government is having the good policy in India.
As we are the very big importer of crude oil, so that should be a major concern to that. We should aggressively.
Yeah, we can reduce our import bills with this. And next segment we can talk, that is telecommunication. So when we talk about the telecommunication, Geo, it only covers into the Reliance Industries till now. And in telecommunication, the rest it is coming the.
Do you have any idea that Jio is a part of Reliance or it is working as a private company?
No, it comes under like Reliance Industries, as per my understanding.
Then as Jio is coming with IPO, I think in next month they have their opening and listing date in end of July. So we are going to see some spin-off from Reliance Industries, or the stock price will not change. I have a bit of confusion in it.
Yeah, actually, I also don't have much idea on this topic. I will like go into much deep inside this.
Let's see.
But we'll talk on this.
Yes, we will make a different video on it.
Yeah. But in telecommunication, as per my understanding, it is the Bharti Airtel.
Yes.
That is major holding here, 5.15%. And I think VI is not under the Nifty 50 because it has like gone down very like less market share it is having.
As of now, only there is one company, Bharti Airtel, in telecommunication.
And then yes. And then we can move forward with the healthcare.
Yes.
That is having the around 5%, 4.9. Yes. In that we are having the Max Life.
Yes, Max Life, Max Healthcare, and Apollo Hospitals.
Yes. So Apollo Hospital is like growing fast if we compare with the Max Hospitals and the Life. Apollo is expanding, like it has acquired multiple like hospital chains in India.
Yes.
And I was just going through one news long before 6 months around. There was one news regarding that one Dubai company was investing into the Apollo hospital chain. So at that time I was like going through that in India healthcare sector is also like it is underrated if we talk about the investing point of view. But if you talk about the growth, if you talk about the sustainability, the business is having the high growth if you talk about these sectors. Anytime this sector will not go like much down because the health sector people will also need this.
Due to very natural disasters as well. And
it is natural with the age the diseases will come in India like by like increasing the lifestyle, your foods and everything, the people will like facing different disease and different problems,
different life culture.
And another one thing that you can directly see that people are being more concerned regarding their health.
Yes.
So this is also like one source of revenue for the company. If you talk about the people is going to regular health checkup.
Yes.
That generally initially if you talk about the before 5 year 10 year, we were not much concerned about this.
Yes.
But now people are taking a regular health checkup in different times, blood tests. So
now
this
they are
is
more
also
cautious about their health.
And hospitals are tapping the people into urban areas generally. Because in village it is very difficult to like approach a people and convince someone to have some taste on a regular basis. But in city people are earning and they are concerned about their health because of the air pollution, water quality and so many things, work stress, the problem, everything that is happening. So that is also like if you talk about the industry point of view, investment point of view, health sector can be a good option I think. And we have different like maybe ETFs for the investing into
we have.
Yeah. In metals and mining, it is also like making 4.5%. In metals and mining, I think the company like which company will come under this? One thing like Vedanta will come under this.
I think Vedanta is as of not part of Nifty 50. It was part of in near about 2020. It was part, but
in this industry,
SEBI
but in this industry, the like Vedanta is a big player.
Yes, big player.
But
we have many Indian government PSUs as well. Hindustan Copper, Hindustan Zinc, that are major PSUs. Comes under metals and minings, but they are also not part of Nifty 50.
Government is having multiple companies in this segment like metals and mining. If you talk about the Nalco and this SAIL, Steel Authority of India. So these small companies are there. This is not a part of Nifty, but these are the coming under this sector, and this can be a good option for investor. The construction company that will majorly covered by the Larsen and Turbo.
Just let us see that which companies fall under the metals and minings
Yeah,
in
definitely.
Nifty 50. So
Like,
we'll get some knowledge about it.
yeah. Till that we can talk about the construction sector.
Yes.
That is forming a part of 4.4%.
Yes.
I think the major sector, major portion will come under the L&T.
Yes. They cover the huge portion.
Yeah. And like I don't think any major company is into the like construction sector. Then we can next move to the consumer durables. One company that we have into the like fast moving consumer goods. Under that we can see the ITC is there,
Yes.
and with the ITC we have other
We have
HUL, Hindustan
Yes.
Unilever, ITC, and ITC.
we have if we can cover Reliance also in it, as they have their Geo Marts
Yeah.
as well.
But it is not like separately listed into the
Yes.
market. But we have the other sectors that will like conclude further. That is consumer service.
Yeah.
That is power. The power sector is forming a less part of the Nifty,
Yes.
but it is prominent, it is dominant, and it is futuristic.
Yes.
We'll talk about more about the power sector, but
Now
let's just talk about the 2-3 sectors
Yes,
remaining
now
here.
let me share the
Yeah.
4.5% of Nifty, which covers by metals and mining. The major holders are Tata Steel,
Yeah.
Hindalco Industries, JSW Steel, and Coal India. They
Yes.
cover the major part.
Mining sector.
Yes, mining and metals in Nifty 50. These are the four
They
major
are under the
companies.
Nifty.
Yes.
Okay. So Tata Steel,
Hindalco.
we know very
Yes.
famously it is comes under the Tata Sons.
Tata Sons.
And we have other companies like Hindalco,
Hindalco, JSW Steel.
JSW Steel,
And
that
Coal
is
India.
yes. So we have 2 PSU and 2 private sector
Private
companies.
Now let's move to the consumer service.
Consumer service, then we have power, we have normal service.
Yes.
In normal service, which company will come like? I think we have to find it
Yes.
because it is bit critical.
Yes.
Because we have already covered our IT services, we have already covered the consumer services.
Yes.
So which services is remaining, we have to see. But the next is construction material, and the next is capital goods. It is last but not the least. It is like capital goods is covering 1.35% of the Nifty.
Nifty.
And as I told you that we'll talk more about the service sector.
Yes.
Not the service, it is probably a power sector.
Power sector.
In power sector we have the like dominant company in different like area. In power sector we have the Adani Power,
Yes.
we have a small company, but it is the Reliance Power into the
We
industry.
have NTPC Green Energy as well.
Yeah. If we talk about the company which is in the Nifty, that is NTPC Green,
Yes.
and then Adani Power,
Adani Power.
then Tata Power will also come under this.
Yes.
And we have seen that some of majority of the power companies now shifting it towards the green energy.
Yes.
I don't think that NHPC will come under this Nifty because it is a bit a small company, but PSU.
Yes.
Yeah. So
And-
these major 3 companies will come under the like.
And
Power.
I think in services as well, I think aviation sectors comes under the services.
Yeah.
The major company is Indigo.
Indigo
Airlines. I think it comes under the
service because there is no specific segment of
for
for that.
aviation. Yes.
Yes. But the surprising fact we have not like gone through any defense sector and defense contribution into the Nifty.
Yes. And in real, it doesn't have also any one company which comes under the Nifty.
But I'm
50.
very surprised about the fact like how HCL, not HCL, like
SCL is the part of
HAL,
HAL is not part of
HAL
it.
and the other like defense
We
companies.
have
Like,
many the market cap it covers like 2.5 lakh
yeah,
crore.
they're
We have
having a
much
good
more
market
doubts.
share, but there is
Yes.
not having the free float market cap of
Market,
that because
yes.
government
Is
holding
holding
is
it,
high.
yes.
So maybe that would be a reason. We'll like discuss it more on this.
Yes.
But let's talk about the return of Nifty on the quarterly and yearly basis.
Yearly.
So if the talk about the price return that the Nifty has given,
What is the price return? Can you please elaborate for our viewers?
it is like a bit confusing. Price return and total return. I'm not like very sure about this, so I have to bit like check for this.
As of as
Yeah.
compared to or as we relate with the mathematics, it should be same, but that Nifty gone from 25,000 to 25,500, that is near about 2%. And same with the respective perspective of investment. We have the investment in Nifty 50.
Okay,
Yes.
so now I got to know understanding about the price return and the total return. I will share this data.
Okay.
But the price return generally talks about the how much absolute return Nifty has given you. As we see that in quarterly return, you will see that the Nifty is given. Nifty has given 6.87, but if you will see the total return, it is 7.40.
Okay.
The difference, price return is absolute how much percentage and how much point Nifty is giving you the return.
Okay.
But the total return is considering the dividend of the company
Okay.
that is there into the Nifty 50.
Nifty 50.
So if the company is giving you dividend, that will also come under the return. So
Yes.
if we are calculating the total return,
Okay.
so the absolute return of Nifty
Okay.
and the dividend you got from the Nifty 50 companies,
This
that
was
will
a very
also come
good
under
point
this.
that we can
So
do
that
this.
is the
Yes.
great point, and
Yeah.
that is like new point for us as well.
Yes. Yes.
So if we talk about the quarterly return, Nifty has like performed well in quarter, but it is not good in 1 year and
Yes.
5-year return. If we talk about the this quarter, like quarter till date,
Yes.
like if
From
we talk,
first quarter of 2026
Uh,
27 year.
not proper first quarter. This data is of the as of 31st June.
Okay.
So it will cover the April, May, and June.
June. That is
Yeah,
the first
sec-
quarter.
Yeah, first quarter. Yeah, this
Yes.
for the financial year.
Yes.
So that has like given 6.87 in price return and 7.4% in the total return.
With
And
dividend.
yeah, this is the net total return 7.16.
I think that is the average
Yeah,
of
yeah, that is
Yes.
like
average of price return and total return, that is net.
yeah, because the Nifty 50, whenever you like invest into the Nifty 50 index,
Yes.
whenever
So-
you invest into the index fund,
Yeah.
they adjust the dividend of the share into your price of the ETF or your like NAV.
Okay.
So your NAV return is 7.16%.
Okay.
So this is the total return given by the like in absolute terms according to the weightage of the companies. Okay.
Don't you think so that if for example I am investing 100 rupees in Nifty ETF,
Yeah.
and Nifty's price return is for example 7% in
Yes.
first quarter, then they will give me only 7 rupees and their Nifty total return is 8 rupees with dividend, and they will keep that 1 rupee.
No, they will not keep. They will adjust that dividend.
If as per of if I don't know about that what is total return and what is price return, I will see the data that Nifty had moved 7% in this quarter and I am getting 7%
Yeah.
on my ETF.
So whenever you will see your ETF or your NAV, that will like move a bit more according to the market if you compare. So you will be maybe surprised that you have some point percentage of the high return. You may think that if I have invested into the index, that should be absolutely like parallel to the index.
Yes.
But it will be not because of the dividend of the
Dividend
company
of
is
the
providing. It is very small like amount,
Okay.
but it will make the differences.
Okay.
And the net total return talks about the after adjusting your dividend, how much NAV you have adjusted. Okay. And
Means
if we,
ETF adjusts the dividend as well into
yeah,
our returns.
but in that adjustment and some of the cost that we generally the mutual fund houses and the ETF they
Yes.
will occur. So that is some like it is a reduction in the like 7.16.
Yes.
So there is 0.36% of the like expense or some other like factors are there. If we talk about the 1 year return,
I have one question
Yeah.
before coming to it, that if I am investing 1 lakh rupees in any ETF, any Nifty 50 ETF, for example, any one company or any organization is managing it, that ETF, is they are investing equal amount of, for example, there is 50 companies, I am investing 1 lakh rupees, they are investing 2,000 in each company, or they are investing according to the market cap?
no, they have to invest according to the weighted of the Nifty of the each company.
Each company.
Then if you are investing 2,000 into Reliance,
Okay.
and if you are investing 2,000 into the bottom company of the Nifty,
Okay.
that both the company will not go into the same direction.
Yes.
And if the Nifty is giving 1% return in one day, your portfolio or your NAV will not change accordingly if you not invest into according to the weightage.
But let's keep aside the concept of ETF, as they have to
Yeah.
give the same return as of
Yeah,
index.
in mutual fund as well, you have to do it.
Okay.
You can keep some portion or some money as a cash with you to manage your
The
like.
ETFs managers, they cannot invest. For example, there is a high potential company, but it is at bottom. They can generate more returns as compared to Reliance or any HDFC bank. For example, there is
Like
small
there is a small
company.
company, but it is having a good potential.
good potential.
So as a ETF manager or
I
the
can't
fund
invest in
manager,
that.
yes, you can't invest because you have taken money
Okay.
as promising to the investor who is investing into the ETF, as you have promised that we are going to invest into the index.
Index.
So you have to make sure that your ETF is aligning with the index.
Okay. Means
So,
diversification it should be same as
as index.
as index.
If you are thinking other like investing into the best potential companies, you can start new ETF
Okay.
according to the sectorial ETF, flexi cap,
Okay.
and you can go with the other like.
Okay.
There are so many, there are different mutual fund houses. They provide the sectoral like
Yes.
funds. They're having flexi cap.
Flexi.
Flexi cap generally gives you that the fund manager understand which company or sector is having high potential,
High potential.
and they starts rotating the fund from one sector to another when the sector is performing.
Okay.
So
Now-
you can invest in like that companies.
Yes, now we can continue with the statistics of
Yeah,
Nifty.
this statistics is a bit horror story for the investors because in year till date, like in past 1 year, Nifty has given the negative return of 8.66%.
From 1st Jan
Uh,
2026 to
uh,
now.
No, it is year till date. So from June, from the 1st July of 2025 to
Okay.
30 June 2026.
Okay. Okay.
Like it is,
Means it is covering
yes,
that
from
12
till
months.
date to before 1 year.
Okay. Okay.
This is not any like a kind of financial year.
Okay,
This is
okay.
from today to previous 1 year.
Previous one.
So that has given around 8.66% in
Negative
price, negative return, and in total return it is 8.10. The negative return has reduced because of the dividend only,
Yes.
and the total return is 8.36. That covers the expenses, whatever the fund houses and they are doing the expenditure.
Okay.
But the surprising fact, if you will see on the 5-year return,
Okay.
whenever the investor invests into the Nifty, the major motive why they are investing into the Nifty, because they can generate some extra return
Returns.
from the safe asset or the fixed income instrument. But the like facts we can see in 5-year Nifty has given 8.71% of price return.
Since 2021.
Yes. So since 2021, it has given you only 8.71. If you talk about yearly, it is only around 1.5 or 1.6% of the return in per year. So that's why your parents will definitely say you would have invested into FD, it will
yes.
give you a high return.
Yes.
Because market is also working into the cycle.
Yes.
If you talk about the COVID term, before COVID era,
Yes.
from 2014, 2015, the Nifty was giving a good return till to 2020 before COVID. COVID came, Nifty reduced and it gone down around 40% of the index.
Yes.
But after the like going COVID era ended, then Nifty was having a bull run,
Yes. After that.
and that was best way, and that was the right time to invest in the Nifty, because whichever company you can see after 2020, it has given a good return.
Yes.
Either company fundamentals is good, bad, that doesn't matter, because in bull run, you just invest in any companies, they will just go up.
Yes.
That is the like
They will generate returns.
that is the specification of a bull run. But in bear, there are the bad companies who will go significantly down. But if
Good as well.
yes, but good company will go not go that much down,
Yes.
as if we talk about the other companies.
Other companies.
But in bull run, every company will go like much higher speeds. That is the difference if we talk about the bull run and bear.
Okay.
And if we see the 8.85, it is the net total return of the Nifty index.
In last 5 years.
And since inception, it's talk about when the Nifty was formed.
Okay.
And from the date of the Nifty were formed and till now, what is the like year to year per year return?
CAGR.
Yes. So that is average around 10.9.
9%.
And
It is quite good.
yeah, in total it is 12.41.
Yes.
Initially it was around 13 to 14%. It has reduced 1 or 2% because of the
Last
2
2 years.
year. Yeah, it is had 2 year consistently negative return by the Nifty. If you talk about the around time frame of November or October 2024,
Yes.
Nifty was at all-time high.
Yes.
Before Diwali and Dhanteras, it was around 26,200 something.
Yes.
Then Nifty fallen during Dhanteras, and after that it was like going down continuously.
As I know, it was my birthday. On 26 September, it was its all-time high in 2024. And
Yes.
since that, the only in recent, for example, in the starting of the year,
Yes.
it had broken and it had went to 26,300
Yes.
something
In January,
in January.
Nifty was like about to Nifty already like reached to the all-time high.
All-time high.
But the problem was after that Iran was
Yes.
started
Yes.
in the February 28, 29,
Yes.
and then Nifty just going down continuously.
down.
And
And another factor is
yes, you can directly see that it gone to around 22,000 level.
Yes.
That was like base. If 22,000 would have broken,
Yes.
then it will directly go to 20,000.
Yes.
But
the major
20
level is 21,700 rupees.
Yes. So 22,000 was the support for
Yes.
Nifty, and Nifty respected that level.
Yes.
And it is now currently heading towards
Yes, it was today. It is near about 3,900.
yes. So it is like moving around 24,000
Yes.
plus minus 500 point.
Yes.
It is going sometimes 24,500. It is going sometimes 23,500. So it is moving around this
that
range.
1,000 range.
So whenever this range will be broken by the Nifty, it can go all-time high, like,
Yes.
but it will take time right now because India is not having that much favorable market for the actually foreign investors.
Do you think that if the war is stable, means genuinely, and not like Trump that every second day he's saying that
Yeah,
let us cease fire,
everything
let
will
us
be
cease fire.
stable.
Yes.
Yeah.
If everything is stable,
Yeah.
and not with that growth, but it will be with small growth. Do you think it will touch the level of 29,000
Yeah, but according to current market like situation,
in
Uh,
next upcoming 6 months?
no, I don't think that Nifty will go around 29,000 because India, as of Indian market,
Okay.
if we keep aside our emotions, you can directly see that in India there is no significant event is happening that can attract foreign investor or other.
And what do you think about that cabinet reshuffle? That it will just boost the market, and many investors and many experienced people are saying that cabinet reshuffle. For example, Nirmala Sitharaman is stepping down.
Maybe, yeah.
Yes, from the finance minister, that it will give
Take
some
an
positive news with respect to
Maybe
investors,
like
as investors are not happy with Nirmala Sitharaman due to that recent changes in STT and last year changes in the short-term and long-term capital gains?
Like as far my knowledge is concerned regarding specific this topic,
Okay.
that any one person is not framing your policy of the any companies or
But
any
it is the
country.
face
Yeah.
of that.
She is the face of the finance ministry, but the decision behind that ministry or the announcement,
Yes.
it has done by the whole team of the finance minister. It is concerned by the different expert of the finance. What was the motive if you see the STT charges and whatever was the increase at that time? To reduce the derivative and speculation into the market.
Yes.
So that was my motive, and the ministry and the government is clear about this.
Yes.
So if we talk about the other sectors, like the major factor, and I am seeing the positive thing, if the Nirmala Sitharaman is replaced by Shaktikant Das,
Yes.
who is the RBI former governor, so it may be a good news for the Indian market, because if your former governor who had achieved the recognition from the the World Bank
Yes.
by best performing governor of the world 2 times.
Yes.
So this can be a good news for the Indian market, that the former governor will lead the finance ministry of India. So like the expectation from him, it would be high for the market.
Yes.
And
so
that we
the
are
market will
positive.
behave accordingly.
Yeah, if this will happen.
Yes.
This is our speculation
Now
only.
this is kind of rumors only. The government didn't give any official statement regarding this.
So the actual reshuffle and who will take which position, that will decision on the government sides.
Okay.
Now we can see the standard deviation. This data is also released by the NSE regarding the index standard deviation.
Okay.
Standard deviation generally tells you how much, the concept of standard deviation is how much your data, generally in the terms of index, from the mean point of the a specific period, how much your data or index is deviating from that point. So if your mean is around 24,500, how much point it is going up and how much point is it going down? So the average things that one number that gives you understanding, that is 13.05.
Can you please go little brief in it, as I didn't get it from that as you said, from 24,500, that how much it is debiting, that's it is a percentage or what?
Yeah, it is it is generally from mean, if you're talking about the 1 year deviation.
Okay.
So if it is your Nifty is 1 year, it is mean would be something, because you have 1 year of data, so you can calculate the mean of it.
Mean, what mean? The percentage return mean or
the percentage return mean from the year, and then you can see if the whole year return is 5%, and if your data is deviating from 5% to 8% and it is 2%,
then don't you think that 13.5% it is huge?
This is 13% from mean, not from the a specific point, like Nifty is 24,000, it has gone to 13% more and 13% down. It is it talks about the mean of your return. So if the Nifty has given if you see that this is 6.87%. So this 13% is talks about 6.8%. 13% of 6.8%. So Nifty is going around 13% more from 6.8%. So if you
6.8 to near 7.5.
So 1 to 2%, 7.5% up and 5% down. So that was the mean 6.8, but it can deviate 13% from its mean.
Mean return.
Yes. So if we talk about the deviation from 1 year and 5 year, it is less than the since inception, because since inception we can see that 2008 crisis, 2013, 2000 .com bubble, then COVID era, then now the recent 2 years. So that was the era that has the high standard deviation. And that is the reason that since inception it is having a high average. But this year Nifty has not gone much high and not much down. The mean would be around 23,500. It has gone to 1,500 up, 1,500 down. So that is the reason of less standard deviation. And we have other two data, beta and the correlation, but it doesn't make any sense because we are comparing Nifty with the Nifty, so that will be no difference. But the concept of beta, I would like to explain it.
Yes.
Like beta generally tells you your index, and we generally compare it beta and understand the beta with the reference to one stock with compared to the index, or one portfolio you are comparing with the index.
Okay.
So how much your portfolio is sensitive towards the index.
Okay.
So like index is moving 1% up.
Okay.
How much percentage of changes you see in your portfolio or in your stock?
Any stock.
So the positive beta tells you that while index is increasing,
Okay.
your stock or portfolio is also increasing. If your beta is 1, that means it is directly correlating with the index. So if index will move 2%, your portfolio or your stock will also move 2%. But the negative beta tells you when the market is going up, your portfolio is going down.
Okay.
So maybe some company works like this, but generally -1 beta is not like a good
The beta
for any
between
company.
-1 and +1.
+1, yes. It can't be more than 1 and it can't be less than -1. If your beta is 0,
Okay.
so that is showing there is no correlation. No correlation.
Okay.
Your portfolio is going somewhere else, market is going somewhere else. There is no correlation. They can go together, they cannot go together. That is no relation.
How can be like no relation? For example, my index is going up by 4% and my portfolio is going up with just 1%.
Yeah, that can be there because your company is not that much famous, or your company is not having fundamental strength.
Okay.
So market is giving a rally towards any news,
Okay.
but that
Thus
news is not related to your company,
Okay, thus
your
it is-
sector.
It is necessary that in my portfolio there should be at least one stock which is a part of index.
That can be, that is very subjective.
Okay.
Because it is not mandatory to have your portfolio with any index
As
stock.
we are comparing our portfolio with index, so if our portfolio doesn't have any single stock from the index, and that there is no sense of measuring beta.
No, you can, and it should be. There is no you are talking, that point is totally different. Is with the concept of beta.
Okay.
So if let's say for example, I am the new investor who can take good risk.
Okay.
I am having the good appetite of taking risk.
Yes. Okay.
So I will more interested into towards the small companies in the same sector, like in power sector. If I talk about,
Okay.
there are different companies which is the part of Nifty.
Okay.
But I am not going to invest in that company because they are already big.
Okay.
So I am seeing potential in some small companies which is having a market cap of 50,000, 40,000.
Okay.
So I will take risk and I will invest in that companies.
Okay.
I will invest in the small companies like Ether, Ola Energy, and like different companies.
Yes.
So they are not the part of Nifty, but whenever the market will go up, they will also go up.
Yes.
So that is I have to make an understanding of the beta because that can directly hamper my overall return of my portfolio. So if you just see in
Not the company, but the sector can
Yes.
be similar.
The sector can be similar, or the company cannot be similar. One company cannot be the part of Nifty and the not part of
The
Nifty.
portfolio.
Yes.
Okay.
So if your portfolio is negative beta, so that is not good because market is having a bull run. Market has performed well. It has given the 14% of return.
That means
But
you
your
could-
portfolio is a -5%, -7% because you have chosen that kind of stock which is having the negative beta.
That means my portfolio
Should
does
be
not have-
adjusted. Yes.
does not have good companies
Yes.
as compared to market.
Yes.
Now
So
it's moves to the fundamentals of Nifty 50, and then we will shortly cover this video. It is near about 1 hour.
yes, and it is quite long, but we have talked about the different topics.
Different topics.
In the between, we have deviated also our
Yes.
topic, but that was also good
points
insights.
and it
insightful.
was necessary.
Yes, and talking about the fundamentals, we generally
Okay.
discuss on the company basis. It is also having on the index basis.
So here I am seeing P.
Yes.
So from as a stock perspective, I compare my stock with industry P. So how can I compare my index P with whom?
Generally, the index P you can compare with the other world markets,
Okay.
like other developed market or the growing market in India, in the world, different countries. like in US market what is being going P is going currently,
Okay.
and if there may be some market which is at the maturity or saturated point,
Okay.
there is less growth,
Yes.
so you can see how much PE at the market is trading at.
Okay.
So you can understand that this PE is overrated and this is overvalued.
Okay.
So there is no significant like understanding of the PE, because in some market after 50 more than 30 40 PE market is growing.
Okay.
But sometimes you might have heard that Indian market is overvalued, it
Yes.
needs to be corrected.
Yes.
So it is correcting from previous 2 years.
Yes. Yes.
But
Since
this is also not sure that it will more correct.
yes, since
Yes.
FIS seeing it is as overvalued market.
Yes. Overvalued cannot be like understood only on the PE.
Yes.
It is more about the potential.
Yes.
You are not investing into the current generation,
Yes.
current profit or the current performance of the
Yes.
company.
We have
You
to
are
see
in-
future
yeah,
potential.
you are generally investing into future.
Yes.
Like PE generally tells if the industry PE is 20
Yes.
and your company is having the 30,
Yes.
then also you can invest and though your company is not overvalued,
Yes.
because your company is having high potential.
Potential. That's
In future your company can perform well.
okay. Means
So-
our company is performing well as compared to industry.
Yeah,
We can also say that.
yeah.
Yes.
So that can be like you have to understand the other companies compared to the other companies, that maybe your company is not currently like generating so much revenue or the profit, but your company is having the high capex, it is expanding into different market, different countries, so it will definitely like generate the future revenue. So you are investing future into present.
Now please decode what is exactly P is, what from where does it is calculated and how it is calculated.
P is generally, first we have to understand that EPS.
Okay.
To understand PE,
Earning
because yes, because while calculating PE, you have to use the formula that is market price divided by the EPS
Okay. Market price divided by earning per share.
and earning per share.
Okay.
So we generally understand the earning per share that is calculated by the total return
Yes.
or the profit.
And divided by
Yes.
number of shares.
Profit which is only for the equity shareholders.
Yes.
Yes, because after calculating the profit, you have also to distribute
shares.
the dividend to preference shareholders.
Shareholders.
Whatever the remaining profit, you have to divide it with the number of
Equity
shares, and then you can understand the EPS.
Yes.
So EPS generally tells you how much money your company is generating for one share you are holding.
Okay.
So if your EPS is 5 and you are having the one share, so for like holding one share or
Okay.
worth of one share, your company is generating 5 rupees for that,
Okay.
and the market price it is there into the market, and you have to just divide the market price divided by EPS. You will get to know about the PE.
P.
So your company is like EPS it is 5. So for per share, your company is generating 5
5
rupees
rupees
as a profit,
as a profit.
but your share is trading at 500.
Okay.
That means your profit per share is the like your market price is 100 times
Okay.
more than the profit per share you are generating.
Okay.
That can be differ from the industry to industry. Some
Yes.
industry is having the 12 PE,
Yes.
some industry is having the 80-90 PE as well.
Yes.
So that depends on the industry. We cannot like stay with any number.
Okay. Now let's talk about the PB ratio.
And PV, with the company point of view, it would be easy to understand.
Okay.
PV it generally like refers to the price to book value.
Price to book.
Price to book value. So it generally tells you how much worth of your share it is actually, because it your share generally trading at a premium.
Okay.
So it is not having the full worth of that rupees,
Okay.
how much it is trading at market. Because when we see that company's share price, the face value of the share is 10 rupees, 1 rupees, but the premium whatever you are giving,
Okay.
and the company is also like share price is also increasing from that.
Okay.
So they are the premium. But to understand the book value, it generally calculates that how much portion and how much like assets or something money that is remaining after paying your all the liabilities in current situation.
Okay.
So if like for company take any XYZ company,
Okay.
and your company is having 1000 crores of asset
How?
and you have the 800 crore of liability at present.
Okay.
So the PV ratio tells you how much worth of share or how much worth of money you will get for holding one share if your company will get dissolved or get sold currently
Okay.
after paying all the liability.
Okay. After
How much?
liquidation.
Yes, after liquidation, what are the money left for each shareholder? That is the price to book value.
Okay.
So for for example, 400 rupees of worth rupees of a share.
Okay. Market price.
Yes. So market price is 400, but the company is having the PV ratio is 40.
40.
So that means if the company will sold instantly, or the company will pay all the liability currently and the remaining amount will distribute it to its all the equity shareholders.
Okay.
So you will get only 40 rupees.
That means price to book.
Book tells you the actual worth of your shares.
You said the ratio, and now you are
Yes.
saying the price.
No, it is like a ratio of your market price to your book price.
Okay, that means if PB ratio is 40%, that is, when my market price is 400 rupees.
Yes.
So 40% of 400 rupees, 160 is my
Yes.
current book value.
Yes.
That is like, or I am wrong.
No, this yes, this ratio tells you that what is the ratio between your price and book value.
Yes.
But book value tells you how much money you will get for
Yes.
one share. So value and ratio it is different.
Yes.
Value is the absolute number and the amount
Yes.
that though your share is worth actually.
Now, how that value is calculated with respect to PB ratio? I am talking about that.
Yes. So you can generally for example, the same example I will go through. One company is having the 1,000 crore of assets
Okay.
and 800 crore of liabilities. So if we instantly pay all the liability,
Okay.
we're left with only 200 crores. And if we have the 50 crore of shares,
Okay.
so we have the 4 rupees for each share.
Yes.
So that is book
Value.
value of one share is
Okay.
4 rupees.
4 rupees.
But your share is trading at,
For example, let's
40
say
rupees.
40 rupees.
so 40 divided by 4,
Yes,
that is 10.
10%.
Yes. So that is 10 times.
Yes.
So your book price to book ratio
Yes,
is
that-
10 times.
that
So
is-
that means your share is 10 times more value, trading at 10 times more value at the actual book value.
Book value.
So that was the understanding of it. And the dividend yield is 1.24%.
Okay. Before coming to dividend yield, I have one question
Yes.
with price to book value only. As we have seen some companies as higher book value
Yes.
as compared to their market price. For example, market price is 100 to 100 rupees and book value is 400 rupees. Why this happens and why investors does not invest in such companies? As I seen the
Yeah,
mainly
There is multiple companies in the
yes,
market.
yes. And mainly companies has stopped trading. They are just listed, and we can't buy or sell that stock.
Yeah, in that they are having very less number of share,
Okay.
and some big player or maybe that company is bought the share through
Okay.
some other companies in the market,
Okay.
and they have just stopped the trading in that.
Okay.
So we cannot talk much about this because there is no meaning of talking on the if one company is not having the
And that
available
is what
share.
I'm talking. Why does it happens? As the company's fundamental is good, that's why their
Yes.
book value is good. Then why the market price is less compared to book value?
Because if you are a shareholder of a company
Okay.
which is having the book value more than the market value,
Yes.
why you will sell that stock?
Suppose it is available to trade.
Yes.
For example.
When it is available to trade, I was
Yeah.
about to talk on this.
Okay.
So generally, what happened? This is the assumptions.
Okay.
We are talking about the assumptions. If this will happen, then what is the value of the share?
Share.
But in stock market, we generally invest into the future.
Yes.
We generally invest into the potential. So you have the good assets.
Okay.
You have less liability.
Yes.
So you have the positive and the high price to book.
Yes.
But the problem is if your company is not growing, your sector is not performing well, your market share is losing continuously.
Okay.
So what is the meaning of having the high book value?
Okay.
Because if you understand the concept of perpetuity,
So.
your company is going to going concern.
Yes.
If we talk about the concept of going concern,
Yes.
your company is not going to dissolve today
Yes.
or in future.
In future.
So this is the assumption that company will continue.
Okay.
So there is no meaning of the price to book generally. The company is not performing well, that's why the investor is not investing in that.
Okay.
So that is the like my understanding is on this. Because if the future is not good, why will invest today?
I am also agreeing with
Yeah.
your clarification regarding this. Now let's move toward the dividend yield.
Dividend yield. There is two different concepts regarding the dividend. People generally get confused in the two concepts. One is dividend payout ratio
Yes.
and one is dividend yield.
Yield ratio.
Yes. So dividend payout ratio and yield, it is a bit confusing.
Yes.
If you talk about the dividend yield, it tells you how much percentage of absolute dividend you have like got with respect to your investment into the stock
Okay.
or portfolio.
Okay.
So like let's say if you have invested 1 crore in your portfolio or any stock
Okay.
and you got 2 lakh rupees of dividend,
Okay.
so the dividend yield tells you how much percentage you got actually in your pocket
Okay.
from your investment in any stock or portfolio.
Yeah.
How much percentage of that you got as a dividend?
Dividend yield.
So that is the dividend yield. We generally compare the dividend yield with the market price.
Yes.
So let's say, for example, a company is trading at 400 and the company has given the dividend of 8 rupees. So it will be around 2%. 2%. So if we talk about the dividend yield, the formula you will use, that is 8 divided by 400.
Yes.
So you will get the number as a 2%.
Dividend
Yes, that is dividend yield.
yield.
But the dividend payout ratio tells you per share how much company has earned, and from that how much percentage or how much ratio is there company is using for that dividend payment.
Okay.
Like for example, we have talked about the EPS.
Okay.
EPS is like the profit available for the equity shareholders
Yes.
divided by number of equity shares. So EPS tells you per equity shares
Yes.
how much money company has earned. For example, for a company is having the EPS of 20 rupees.
Yes.
So for each share, company has earned 20 rupees.
20 rupees.
From that,
How much
company is paying dividend to the investors. So if the company is paying 5 rupees,
Yes.
so the dividend payout percentage, if we talk about, it would be around 25%.
Okay.
If we talk about the ratio, it would be 1:4.
4.
So this is the difference,
Yes.
and he'll talk about the return on your actually investment. And the EPS or the payout ratio talks about the company's earning,
Yes.
and from that how much company is giving dividend to its
Also, in
investors.
short, we can say